It's been very interesting because 2 months ago, the Conservatives in Canada were 20% ahead in the polls. It was almost certain that Pierre Poilievre, the head of the Conservatives, would be the next Prime Minister. And Trump has changed everything. There's this sudden patriotic feeling in Canada where I live. So Carney is obviously not a politician. You know, he's a technocrat. Be interesting to see how he gets on. I mean, Trump really hated Trudeau. That was pretty obvious. The relationship between Carney and Trump will be very important for Canada going forward.
The interesting part for me is a broader conversation too on markets and where tariffs go, because the narrative has been that Trump has all of the chips. But the reality is we've seen reactions in Canada now. We've seen the Europeans the other week also step up their own programs. It doesn't feel as though Trump does actually hold all the power at this stage. Do you agree with that? And what does that mean for the ramification of inflation stateside and how tariffs land on the US economy?
I think there's a strong argument that the US would be very badly hurt by tariffs too. I think the IMF did some work suggesting that the impact, obviously we don't know exactly what the tariffs are going to be, but could be to reduce US GDP by as much as 1%. But obviously for other countries it's important too. In Canada, 80% of Canada's exports go to the US. So if there is 25%, if there were 25% tariffs on all of Canadian exports, that's clearly very negative for the Canadian economy too. I mean, from an economist's point of view, tariffs are not a good thing for global growth. And they're also a risk for inflation. I mean, higher inflation and lower growth doesn't sound like a great economic environment.
Let's broaden out the conversation to other parts of the world. I saw in a recent note how you were saying, buy the museum, buy European companies. Tell us why you think that's the case, despite these conversations around trade conflicts.
Yeah. So it's partly a valuation story. I mean, the problem in the US is not just the economic uncertainty, but that the stock market is on a forward P of 23 times. Europe has obviously picked up a little bit, but still only on 14 times. So that's sort of the way markets work. It's not whether the environment is good or bad, it's what it is compared to what was expected. And I think there also are some arguments that Europe has structurally improved as well. The banking system is crucial in Europe. And if you look at the return on equity of US banks and European banks, they're about the same. But the US banks are on a price-to-book ratio of 2.5 and Europe's on about 1. So Europe's a real bargain compared to the US. And there's some risks. Europe's more cyclical. If there is a global recession, Europe will be hurt by that. But I think we're probably getting to the end of the era of US exceptionalism, where for 30 years US stocks have just done nothing but outperform. As an investor, you need, I think, to be much more diversified now, and Europe should be a big part of that diversification.
Beyond banks, what other sectors would you highlight as key opportunities in the European market at this stage?
Well, defence is something we've liked for a long while. It's obviously already gone up a lot, but that has to be with the increase of defence spending in Europe, something you'd want to look at. Europe's classical strengths are in things like capital goods, and that's an area I think CapEx at some point structurally should improve. Luxury goods is obviously a European strength as well, but also there's some little pockets of technology. If you look at tech plus luxury goods is now quite a bigger proportion of the European market than it was, say, 10 years ago. So it's a bit less dependent on the sort of old economy, sort of cyclical sectors than it was in the past.